Slide 1. Welcome to the Promoting Opportunity Demonstration, or POD, What CWICS Need to Know training. This is a self-standing, pre-recorded training for CWICS who are working with former POD participants. So let's begin. Slide 2. On Slide 2, you'll see our learning objectives. So what do we want you to get out of this training? Well, our hope is that when you finish reviewing all the information in this training, that you'll be able to describe the purpose of POD so that you know how the demonstration fits into the larger picture of the Social Security mission to promote employment among beneficiaries. We want you to be able to summarize the key differences between the rules for working while in POD and the current law. This will give you a better perspective on what the participants experienced while they worked during POD and what the implications of POD participation are when you provide benefits counseling to these participants after POD. Slide 3. On Slide 3, let's begin with just a basic overview of POD. POD is an acronym for Promoting Opportunity Demonstration. This particular demonstration project was authorized by the Bipartisan Budget Act, or BBA, of 2015, which allows Social Security to carry out demonstration projects that promote labor force attachment and identify mechanisms that could result in savings to the SSDI Trust Fund. So it really is about testing ways to help beneficiaries go back to work. Remember that the SSDI program is a wage replacement program. This is a disability benefit for individuals who worked for some period of time in the past and were able to establish insured status and then became disabled at a level that would generally preclude their ability to support themselves by working. So Social Security has engaged in a variety of demonstration projects to see if there are ways to help beneficiaries go back to work, stay attached to the workforce, and to eventually let go of the SSDI cash benefits to add to the savings in our trust fund. The POD project is one of these demonstrations. Now, you may have heard of another fairly recent demonstration program known as BOND, B-O-N-D, and that stands for Benefits Offset National Demonstration. It's similar to POD. It was an early test to see what would happen if instead of having the SSDI benefits stop entirely when an individual engaged in substantial gainful activity, if maybe it would be more advantageous to start reducing that benefit similar to the way that the SSI program treats wages. The idea here is to see if we implement this kind of offset program where the benefits are decreased gradually over time. Does that encourage beneficiaries to go to work who might otherwise not do so? And for those who would go to work, does it encourage those individuals to earn more and perhaps to generate some savings to the trust fund? So this particular demonstration program, POD, is testing the use of a benefit offset based on earnings as an alternative to certain rules currently applied to the Title II disability beneficiaries who work. You've all completed the initial WIPA training where you learned all about the usual Title II rules for someone that goes to work. Those include things like the trial work period and all of those rules about engaging in substantial gainful activity and how Social Security makes those SGA determinations, and when benefits might be suspended because of work in the extended period of eligibility. But this project, POD, replaces a lot of those rules. It simplifies those rules, and instead of that full benefit check stopping when the beneficiary achieves SGA, this offset allows for a gradual decrease at a different threshold figure when earnings reach a certain amount. Slide 4. So here on Slide 4, how is POD different from the current law? POD was designed to test a benefit offset that will reduce a beneficiary's cash payment by $1 for every $2 in that individual's earnings above the POD threshold. The POD threshold is equal to the current year trial work period level, which is $940 in 2021. So if you participate in POD, work above the threshold will cause that cash payment to gradually be reduced. Now, the POD rules also simplify the work incentives, and they're intended to promote increased employment and earnings for SSDI beneficiaries, thus hopefully reducing the reliance on the SSDI benefits. Now, when we talk about simplification, there are lots of rules that you learned all about during initial training and certification that simply don't apply in POD. For example, the trial work period, or TWP, and the extended period of eligibility, or EPE. For individuals in the POD program, it's much simpler. You go to work. If your earnings are above a certain level, a threshold, then your benefit checks start to be reduced. It's not related to the TWP or EPE or any of those sorts of work incentive phases that we taught you. Those are the standard rules. POD rules are substantially different. Slide 5. On Slide 5 here, another really important thing for you to understand about POD is that it's a demonstration experiment. This is a research project, so Social Security conducted this demonstration as a randomized controlled experiment. It's research. The SSDI beneficiaries who volunteered to participate in POD were randomly assigned to a current law control group, so that group is going to have rules that are all exactly the same as everyone else in the SSDI program, and then there will be individuals randomly assigned to a treatment group. In POD, there are actually 2 different treatment groups. The treatment groups have some variance. If you want to read about how the research demonstration was structured, we have provided a link to the Promoting Opportunity Demonstration website on this slide. Slide 6. On slide 6, let's review the POD project timeline. Now, as a demonstration project, POD is time limited. POD actually began January 1st of 2017, and it will end in December of 2022. The POD evaluator began to enroll beneficiaries in January of 2018. Now, this is a little complicated because lots of different agencies are involved in the implementation of POD. The POD evaluator is an agency known as Mathematica Policy Research, or just Mathematica for short. Now, the evaluator, Mathematica, conducted all the outreach to the beneficiaries. They recruited the enrolled participants beginning in January of 2018. Now, participants had varying lengths of participation depending on when they were randomly assigned to either the control group or one of the 2 treatment groups. Participants may have a minimum of 2.5 years of participation or a maximum of 3.5 years. POD ends for participants the last day of June in the year 2021. Beneficiaries aren't forced to participate. It's voluntary. They may participate or they may not. If a participant chooses to participate and then decides they don't want to participate anymore, they may withdraw from POD at any time. Slide 7. On slide 7, let's talk a little bit about the POD treatment groups. Now remember, there are 2 different treatment groups, and they have a lot in common and a few things that are very different. Both of the POD treatment groups are able to use the POD benefit offset, and there's no difference in the way the offset is applied to anyone in either of the treatment groups. It's the same no matter which treatment group you're in. So remember that we discussed the offset for earnings that are over the POD threshold, that there is a $1 reduction for every $2 of the wages over that specific threshold amount. That's the same no matter which treatment group you're in, 1 or 2. And the other thing that both of the treatment groups have in common is the work incentives counseling that the POD counselors provide. So there's no difference in terms of what level of service these individuals receive. Now, the 2 POD treatment groups do differ in policies applied once benefits are fully offset, and that means that when an individual's earnings are high enough that the SSDI cash payment has gone to 0, so that would be considered fully offset. That's what that phrase means. When benefits are reduced to 0 due to earned income, this is where the difference between the 2 treatment groups comes in. So for treatment group 1, SSDI entitlement will continue through the end of the demonstration period, regardless of the length of time that the individual is in full benefit offset. So that person just kind of stays in the status where there's no check, but they're not terminated. They can come back into cash payment status if their wages fall below a certain level, and that just continues on throughout the life of the demonstration project. But people in treatment group 2 can have their SSDI entitlement terminated after 12 consecutive months in full benefit offset. So for those individuals, if their wages are high enough that the cash benefit goes to 0 after the POD offset is applied for 12 consecutive months, then individuals in this treatment group would be terminated from benefits. Now there's a bullet here at the bottom of this slide. It's really important that everyone understand that benefits can still be terminated for those in the POD demonstration program for reasons other than earnings, such as a medical recovery, so there's nothing in the POD treatment that says we're not going to do medical reviews for people who participate in POD. Slide 8. Slide 8 provides information about where POD was tested. Now this is not a national demonstration program. There were 8 POD sites in various states. These states included Alabama, California, Connecticut, Maryland, Michigan, Nebraska, Texas, and Vermont. In some sites, POD only covered a portion of the state. However, there was no rule in POD that said participants had to stay in those states in order to stay in the demonstration, and several people did move to other parts of the country. POD counselors continued to serve them, regardless of where they lived after enrollment, unless they left the United States. That means that you may encounter people who participated in this demonstration all over the country. Slide 9. On slide 9, let's talk a little bit about the POD evaluation objectives. Now remember, we talked about POD not just being a demonstration program, but it's a research program. To determine if the interventions are effective in helping beneficiaries go back to work or to work more, there has to be a formal evaluation. So what are the objectives, the evaluation objectives of POD? Basically, it's to estimate the impact of the POD benefit offset on several outcomes: earnings and employment, benefit payments, total income, and other outcomes such as a beneficiary's health status and the quality of life. The evaluation contractor for POD is Mathematica Policy Research. Slide 10. On Slide 10, let's review the agencies or entities that were part of the POD implementation team. Let's start with Apt Associates. They were the primary POD implementation contractor. Their roles include providing oversight and leadership for the entire implementation team, all of the agencies that were partnering together to implement this project. Apt also coordinated the delivery of services to POD participants, including providing training to counselors on the data collection system and information on how beneficiaries report their earnings, among other topics. Lastly, they managed the POD call center and processing center. As we discussed before, state VR agencies and other community programs served as the POD sites, with counselors and supervisors housed locally. They provided benefits counseling that mirrored the WIPA model, but with some services unique to POD. One of these services was assistance with monthly earnings reporting. Now, Virginia Commonwealth University, or VCU, provided training and technical assistance, much like they do for the WIPA projects. So we have several staff who have extensive knowledge of POD. Slide 11. Slide 11 includes information about POD work incentives counseling service delivery. The services that POD counselors provided to participants were designed to mirror WIPA services. There were a few minor differences, especially in the area of assistance with reporting earnings, but for the most part, services closely resembled those delivered by the WIPA projects. Now, the POD counseling services include all of the services provided by WIPA projects, including information and referral. This is the short term that you deliver primarily to beneficiaries who are far away from working, like they may not have completely decided to work yet, or they may not have a clear employment goal. Second is that customized individualized benefits analysis, where you're looking at a specific human being with an earnings goal, and you are helping that person understand how that earnings goal will affect their benefits under the POD rules. And then finally, follow-up support for those individuals who need it. Slide 12. On Slide 12, let's do a brief review of how POD differs from the standard work rules for Title II disability beneficiaries who are not participating in this demonstration. So under the standard rules, full SSDI benefits are suspended during the EPE if earnings are substantial gainful activity, SGA, after the TWP in the 3-month grace period. Now, you studied this at length when you went through initial training. And remember how this all works. So for non-POD people who are under the standard rules, when you go to work and you get SSDI, you enter the first phase of the work incentives, which is the trial work period. And remember that you can earn any amount during the TWP and be guaranteed that your benefit will not stop. After the TWP, Social Security evaluates your wages to see if you're engaging in SGA, substantial gainful activity. And for beneficiaries who aren't engaging in SGA, the check simply continues. The individual is in their EPE, which is 36 consecutive months. And if the person engages in SGA again or ever, then benefits essentially will cease. Now under POD, we're testing a benefit offset that gradually reduces benefits. Remember, under the standard rules, it's an all or nothing proposition. A beneficiary who engages in SGA and continues to show that pattern of work behavior is very likely to have the full benefit check stop. Under POD, Social Security is testing to see what will happen if instead of stopping the entire check, if the check gradually reduces. So rather than the beneficiary facing sort of that cliff when the check suddenly stops, it's more like a ramp where that check gradually reduces over time as earnings increase. And the way that the offset works, it's not dollar for dollar. It's similar in some ways to the way the SSI program works, that there is a reduction of $1 for every $2 earned above the POD threshold. Remember that earlier in the training, we explained that the POD threshold is equal to the current year TWP level, which is $940 in 2021. One of the important things to understand about POD, and it's one of the really exciting things about this demonstration, is that it greatly simplifies the SSDI work incentives. So when you're in pod, you don't even have to think about the trial work period. That whole process of going through the SGA determination and all of the work incentives that are applied when Social Security is looking to see if work represents SGA. And you've been trained on those, right? The IRWIs, the subsidy, and the special conditions, the potential for an unsuccessful work attempt, and all that income averaging, right? That's a lot of complication that's involved under the standard rules. Whereas in pod, that's all gone. So there's no worries about the trial work period. There is no evaluation of SGA. There is no grace period. There is no EPE. So all of that complicated tracking that we taught you how to do in the initial training, that's the standard rules. But those rules don't apply to anyone who is in the pod demonstrations. So you don't even have to worry about that, and neither does the beneficiary. This is a tremendous simplification of the standard rules. Slide 13. So what are some additional differences between the treatment for pod participants and those who are having their earnings evaluated under the standard rules? On slide 13, you'll see that under the standard rules, countable earned income is derived by taking certain deductions off of gross earned income, things like IRWIs, subsidies, special conditions, things like that, and also things like paid time off. So remember in initial training, we taught you that when Social Security is looking at SGA, substantial gainful activity, they're not going to consider pay that was received when you weren't actually working. So if there is sick leave, if there is vacation or holiday pay, all of that is taken off. Remember, that adds complication to the system. But under pod, gross income counts with no deductions. Now, there is one exception in regards to IRWIs. In pod, a participant could have an alternate threshold established that was more than the current year TWP level if their IRWIs totaled more than that threshold amount. Then the amount of IRWI became the threshold amount, and for every $2 of earned income over that amount, their SSDI payment would be offset by $1. This was a fairly rare occurrence in pod, but it did happen. That's very different from the standard rules when it comes to IRWIs. But for the most part, this is greatly simplified, so we don't have to worry about determining what countable earned income is anymore. It's what was in the paycheck, right? It's very simple. Now again on this slide, another difference. Under the standard rules, earned income generally counts in the month when the work was performed, not when you actually got the paycheck. You'll remember back to initial training, we talked at length about that. Now there are some exceptions under the standard rules when Social Security maybe isn't able to take the pay stub and figure out when that income was actually earned. And under those circumstances, they will simply look at when it was paid, and it will be attributed to that particular month. That's why the word generally is used in this slide here. But under pod, earned income always counts in the month that it's paid. So when the beneficiary gets that paycheck, that is when that income counts for that person. So again, it's a simplification. You don't have to worry about, okay, well, the pay period crossed over a month, the work was actually earned on these days, but it was paid in this month. No worries about that in pod. It's greatly simplified. All that matters is when those earnings were paid, when they were received by the beneficiary, not when the actual work was performed. So, simplified because no deductions are taken off of gross earned income to figure out what their countable earned income is, and income counts when it's paid or received, not when it was earned. Slide 14. On slide 14, let's talk a little more about work CDRs during pod. We mentioned in the last slide that work incentives are frozen from the time of the last completed work CDR and the end of pod. Now, one of the wonderful things about pod is that it totally simplifies the whole treatment of work for SSDI beneficiaries. During pod participation, no SGA determinations were made. SGA isn't even a concept that's applicable to pod participants. That's wonderful because that's such a complex issue for people who are operating under the standard rules. And it's something you absolutely don't have to worry about or counsel on for pod participants. So during participation in pod, no work CDRs are initiated, and that's wonderful. So what happened to someone who came into pod with a pending work CDR? These were typically canceled upon random assignment into pod unless the work CDR is considered to be in due process. Due process is a term that describes that whole reconsideration and appeals process. So let's say a work CDR was performed, a determination was made, and that determination is being appealed. So if the work CDR is pending, that means no decision has yet been made or rendered. That would typically be canceled during pod participation. If the work CDR is in due process, then that work CDR will continue on. Work CDRs completed prior to pod enrollment will stand. Anything that occurred before the date of enrollment where SGA was determined, cessation was established, and the grace period was used, that determination will stand. Work CDRs will resume after pod participation ends. Undeveloped past work performed before pod participation will not be subject to a work CDR during or after pod participation. That's an important counseling point. Slide 15. So on slide 15, we are going to switch gears and move on to the next topic of this lecture. Let's take a look at what happens to the standard SSDI work incentives when maybe the beneficiary has used some before they participate in pod, and then what happens during pod participation. Finally, we will talk about what happens after an individual stops participating in pod. Here's the basic rule. It's very simple. Social Security doesn't count months of pod participation when determining usage of the trial work period or EPE months. So it's really as if those work incentives get frozen in time. As soon as that individual enrolls in pod, all of that tracking of the TWP and the EPE, it just stops. It freezes in time. And it gets even better. Some beneficiaries who enrolled in pod did not have completed work CDRs for a while before their random assignment, or RA date. Sometimes the last completed work review occurred several years before that time. Well, Social Security decided that they would not subject beneficiaries to a work review for that period of time. So, for example, if a beneficiary's last completed work review date was in November of 2016 and the RA date for pod was October 2018, Social Security will never go back and determine TWP months, count EPE months, or make an SGA decision. They will just start with July 2021. That is great news. Now, the date of last work review action on the BPQY is not always the same date that a work CDR was completed. So, Social Security supplied the pod project with the actual work CDR dates, and pod counselors were able to provide work incentive counseling based on these dates as part of their offboarding services for participants returning to standard law. We will discuss this in more detail later. Beneficiary TWP and EPE usage prior to the last completed work CDR remains frozen during pod participation. Whatever the counts on the months for TWP and EPE were, that is frozen in time throughout the entire period that that individual participates in pod. Now, beneficiaries pick up where they left off in the usage of these work incentive phases after pod participation, so it's almost as if those months of pod participation just didn't happen. Slide 16. In the last slide, we introduced the concept of the frozen pod period. In order to be sure that you fully understand this concept, let's look at the difference between the frozen pod period and the pod participation period, which encompasses the starting date of enrollment into pod all the way until the last month of pod enrollment. For most participants, the last month of enrollment was June of 2021, but some participants opted to withdraw earlier. In contrast, the frozen pod period actually begins with the first full month following the last completed work CDR and ends with the last month of pod enrollment. Since a lot of pod participants did not have a completed work CDR immediately before their pod participation date, the frozen pod period will almost always include more months than the pod participation period. And remember, Social Security will never go back and develop past work during the frozen pod period. That is a big advantage for participants. Slide 17. Now there is some interesting information on slide 17 here, and it's all good, about the way that the TWP is applied before and after the frozen pod period. So if no TWP months were used and developed through a work CDR before the beneficiary enrolled in pod, that person has the entire TWP available after pod participation ends. So no harm, no foul. That person still has that wonderful phase of work incentives available to use under the standard rules. If the entire TWP was used and developed through a work CDR prior to pod participation and no new period of entitlement has been initiated, no TWP months would remain available after pod. So it's kind of the reverse of that first bullet. So if all of your TWP was over before you enrolled in pod and were randomly assigned, then that TWP is done. It's over, and you don't get another one unless you establish a new period of entitlement. That's pretty complicated, and that's as far as we're going to go in explaining that. But that original TWP, if it was used prior to pod participation, it's done, It's over. You don't get another one on that original period of entitlement. Now, the third bullet is where things get a little complicated, but actually the treatment under POD is quite beneficial. If some TWP months were developed through a work CDR before POD, those months remain on the record. When POD ends, the TWP months that occurred more than 60 months ago will no longer count. So your TWP is frozen, but guess what? That whole concept of that rolling 5-year period, that moving 60-month period that keeps moving forward. And remember from initial training, your trial work period can't end until 9 TWP months all occur within the same 60-month period. We'll talk about this a bit more on the next slide. Slide 18. So here on slide 18, we have these two concepts, the frozen POD period and the rolling 60-month TWP window. Even though TWP months do not count during the frozen POD period, the 60-month clock is still running. Why does that matter? Well, consider this. If you only used 3 months and you enrolled in POD and you became unenrolled 5 years later, at that point, Social Security is going to look backwards for a full 60 months and see, those 3 months that were used before enrollment in POD, those didn't occur all within the same 60-month period. They're going to fall off. We're going to forget about those and we're just going to move forward. So you can see that the fact that the TWP is frozen during POD participation, but that 60-month rolling period concept that applies to the TWP keeps moving forward is highly beneficial. So for a whole lot of people who enroll in POD, if they had a little bit of TWP usage prior to enrollment, some, if not all of those months will drop off and will no longer count because of the rolling 60-month period concept. Now, CWICS and CPWICS, who work with former POD participants, will want to obtain a post-POD BPQY, and that BPQY may show a few TWP months that were developed prior to that frozen POD period. This is where you will need to remember that rolling 60-month window, because some of those months may not count, and Social Security should catch this when they conduct a post-POD work CDR. Now again, if that concept is confusing to you, we're not going to spend time in this lecture reviewing it. Go back and review your CWIC training manual and reread all of that information. Get help from your TA liaison from VCU if it's still murky. Those are the basic rules that apply to the SSDI program, and you need to understand those to be able to understand the differences in how the POD intervention affects things. So in this particular example, this is quite beneficial, and we want to make sure that you're developing past work and explaining to beneficiaries what will happen to the work incentives they started to use prior to enrolling in POD when POD ends. Slide 19. So on slide 19, let's switch gears and talk about how the EPE relates to the frozen POD period. Now remember, in order for the EPE to begin, the TWP must be completed. That means that Social Security developed the whole 9 months of the TWP during a completed work CDR prior to POD, right? Each person's situation is going to be a little different here, but some people may have completed the TWP a while before the date of the last completed work CDR, and they may have used some of those 36 months of the EPE as well. But here's the good part. The EPE is frozen from the date of that last completed work CDR, all the way through the last month of the POD participation period. Now keep in mind that although the EPE does continue for 36 consecutive months, it's different from the 60-month window we talked about for the TWP. The 36-month EPE clock stops during the frozen POD period. That means that after the last month of POD participation, the beneficiary simply picks up with the EPE months wherever they left off. Are you getting confused? Don't worry. On the next slide, we'll go through an example. Slide 20. On slide 20, let's look at an example of Monica's EPE. The starting point is finding out information about that last completed work CDR prior to POD. In Monica's case, this was December 16th, 2016. Now during that work CDR, Social Security determined that Monica's TWP started in January 2015 and ended after December 2015. Therefore, her EPE started in January 2016, the next month after the end of the TWP. Fast forward here to when Monica enrolled in POD, which was January 7th, 2018. She stayed in POD for the duration of the demonstration, So her pod participation ended at the end of June 2021. However, Monica's EPE is frozen starting the month after the month of her last work CDR. Since the work CDR was completed in December 2016, her EPE is frozen starting with January 2017. Are you following this so far? So how many EPE months has Monica used? She has used 12 months from January to December of 2016. Those months occurred prior to the month after the last completed work CDR date. So what does that mean for Monica after her participation in pod ends? Well, her EPE resumes with the month following the last month of her pod participation period, which in her case is July 2021. So her 13th EPE month is July 2021, and she continues with consecutive EPE months from then. Slide 21. On slide 21, let's talk a little bit about what happens to the cessation month and the grace period. As a word of reminder or review, cessation and grace period occur when Social Security makes an SGA determination. After the TWP, Social Security is evaluating the wages that an individual is earning, and they're looking at the 4 tools in the toolbox. Remember those from the initial training? IRWIs, subsidy, and special conditions. They're looking to see if maybe income averaging applies, and also to see if an unsuccessful work attempt applies. All of those tools are used to help Social Security employees make a proper SGA determination. So if SGA is determined, if Social Security says yes, this person has demonstrated the ability to engage in SGA, the cessation month is established as the first month where that pattern is established, where it shows after the end of the TWP, and that person is permitted to keep a payment in that month and the following 2 months, which sort of collectively is known as the grace period. It's a little 3-month work incentive phase, and it only is used if Social Security decides that a beneficiary has engaged in SGA using the 4 tools in the toolbox and making that determination. So that's our review. If that concept is murky for you and you need a little bit more, go back to your manual and review that unit. Now remember, Social Security does not perform SGA determinations during pod, so that's not even a concept that applies. So there is no cessation. There's no SGA determinations. So here's the important part. Any month during the frozen pod period cannot be a grace period month. Now after pod participation ends, the cessation and grace period will occur the first time the beneficiary is determined to be engaging in SGA. If the participant engaged in SGA and used the grace period prior to the last completed work CDR, that person will not get another grace period in the same period of entitlement. But what happens if Social Security determines cessation during the last completed work CDR prior to pod, but not all of the grace period months occur before the frozen pod period? This is rare, but it did happen in a few cases. And that's where the last bullet in the slide comes in. Basically, if there are any unused grace period months left, the beneficiary will simply pick up where they left off the months after pod participation ends. Social Security basically splits up those grace period months. So it's kind of like the way the TWP is applied. If you use this small work incentive, remember, it's just 3 months. Prior to enrollment in pod, it's done. It's over. If you haven't used it, you only used part of it before the frozen pod period, you will not use it during pod participation because the whole concept of SGA is not relevant for pod participants. After pod participation ends, the cessation and grace period is used just under the standard rules. So if you've never engaged in SGA before and you're determined to be engaging in SGA, then your cessation month will be established and your grace months will follow. Standard rules will apply for that. Slide 22. On slide 22, we will talk about beneficiaries who are in their initial reinstatement period, or IRP, after pod. Now, this may sound familiar to you at this point, and it should come as no surprise that the IRP is frozen from the date of the last completed work CDR prior to pod all the way until the end of pod, which is that frozen pod period. Those months don't count regardless of the person's earnings. Now remember that IRP months are a little different than counting the EPE, for example. The presence of SGA level work is a key factor in counting IRP months, and the rule is that the beneficiary is in the IRP until they have received 24 months worth of cash payments. They are not due a cash payment for any months that they engage in SGA. So when a beneficiary exits POD and they are working above the SGA level, they may have been getting a partial payment due to the POD offset. But once they return to standard rules, they will not be due a cash payment, and they will not use another IRP month until their work falls back down below the SGA level. Slide 23. On slide 23, let's take a look at the extended period of Medicare coverage, or EPMC, and the frozen POD period. Now remember that there were 2 treatment groups in POD, and the rules for each group were slightly different. Basically, it was possible for participants in treatment group 2 to terminate from entitlement if they earned enough for their cash payment to be suspended due to their earnings for 12 consecutive months. So for everyone except for those in treatment group 2 who had benefit termination, the rule is the same. Social Security excludes all months during that frozen POD period in the EPMC timeframe calculation. That would include all of the months starting with the month after the last work CDR to the end of POD participation. Now, if you need a little review on how Social Security calculates the EPMC, review that section of the CWIC manual or take a look at the EPMC briefing paper on the NTDC website under the Resources tab. You can always consult your TA liaison for assistance with this also. Slide 24. So what about those POD participants in treatment group 2 who actually had their entitlement terminated during POD? Well, here on slide 24 are the main points you need to know. First, there was just a small number of participants that actually did terminate due to 12 consecutive months of full offset during POD, so you likely won't run into this very often. But these beneficiaries were entitled to 93 months of EPMC following termination. This 93 months supersedes any prior EPMC calculation, so they just get a whole new EPMC. That is a great advantage for them. However, one thing to keep in mind is that these folks are also entitled to file for expedited reinstatement, or EXR. If they become re-entitled under the EXR provisions, then that is their basis of entitlement for Medicare, and that 93-month EPMC is no longer relevant. This is when you may encounter some of these beneficiaries, and they will need counseling on the work incentives that are available to them. Slide 25. In order to provide accurate benefits counseling to former POD participants, it is helpful to know what information they received during POD. Keep in mind that just as in the WIPA program, individualized work incentive counseling was voluntary. Although counselors did proactive outreach, some participants did not elect to receive this service. Participants who did engage in individualized services received customized reports before they offboarded from POD. Working beneficiaries received either a BSNA or a simpler exit summary outlining the status of their benefits after POD. Participants who received individualized services but were not working received an exit letter, which was even more short and simple. These documents verified the date of the last completed work CDR, which will be crucial for your post-POD benefits counseling. The POD counselor used all of those rules we discussed earlier when they developed the summaries. So, for example, they estimated how many EPE months a participant had left after POD using the rules for when the EPE was frozen. They explained whether the participant should expect to see any changes in benefits, such as Medicaid and the Medicare Savings Program after POD. As you meet with these beneficiaries, ask them if they have a copy of this report that they can show you. POD participants also received instructions to report any future earnings to their local Social Security office. Slide 26. Slide 26 includes valuable information for you about overpayments that beneficiaries have incurred during POD. These overpayments may be a result of late or incomplete reporting of wages. Rest assured that even though some beneficiaries may not understand why they were overpaid, Social Security did send out notices that explained how those overpayments occurred. When you are assisting beneficiaries who have overpayments that occurred during the POD participation, it is helpful to know that the local offices did not process payments during POD. The regional payment centers handled this. Therefore, staff in the local offices do not have much information about POD. However, the local offices would handle any appeals or waivers that a beneficiary would file. If the beneficiary has retained copies of the notices from Social Security regarding overpayments, You may want to review them to better understand how the overpayment occurred and to better advise the beneficiary of their options. One thing to remember here is that if the beneficiary has a current payment agreement on file with Social Security and they incur a new overpayment, they need to contact their local office to renegotiate that payment agreement. Slide 27. On slide 27, let's talk a bit about an event that will happen post-POD. This is called the End-of-Year Reconciliation, or EOYR. This is not a process that CWICS or CPWICS need to concern themselves with normally, although it is a process that is not exclusive to POD. During the 2021 EOYR, Social Security will look at all of the verified earnings they received from the participants during the year, and they look at the IRS certified earnings totals. They then reconcile any differences to determine if the person was paid correctly. The EOYR normally occurs around August of the year after. So, for example, the 2021 EOYR will run in August of 2022. Since the POD participation period ended in June of 2021, Social Security will look at the POD earnings from January to June of 2021, and then they will exclude the post-POD earnings from July to December of 2021. Earnings that occur post-POD will not be affected by the EOYR. Since we don't expect you to get involved in assisting beneficiaries with the EOYR process, it is helpful for you to know that it will happen. Be aware that beneficiaries may receive notices related to the EOYR, and the process may result in an overpayment or an underpayment. Slide 28. As CWICS and CPWICS, you are all familiar with the importance of obtaining a BPQI for verification of benefits received. On slide 28, we have listed a few things you will want to know about the BPQI when you counsel post-POD beneficiaries. First, the BPQI shows demonstration project information on page 2. For POD participants, you will see a random assignment date. This is the date they began their POD participation and the end date for POD. For most people, the end date will be June 30th, 2021, but some people withdrew from POD early. Since POD participation was voluntary, some people decided that they no longer wanted to participate and withdrew. That is fine, but keep in mind that those individuals became subject to standard rules the month following that date. Now, the information that you see on page 2 of the BPQI about trial work months used and cessation should be accurate. This is because those fields are not updated until a work activity review has been completed. However, the date next to the heading under SSDI activity entitled Last Work Review Action may not be the date of the last completed work review. Remember that some work incentives were frozen from the date of that last completed work review and the end of POD. So, if someone started their EPE before POD, you would need to know the date of the last completed work review to know whether or not they still had EPE months available and how many, right? Remember that the POD counselors did send reports to the participants who were in individualized services and had signed a 3288 release form. So some of the people that you encounter may have that information available. If not, you may need to verify the date of the last completed work CDR through Social Security. Your VCU liaison has access to staff members at VCU who worked with the POD project, so you're not alone. You can reach out to us for help figuring this out. Now, the last thing we want to point out here is that the BPQIs that were produced during POD will show an SSDI amount that may be reduced due to the POD offset. That is not the full amount, but the offset amount. Therefore, you will definitely want to request an updated BPQI dated August 1st, 2021 or after to be sure that the amount you see on the BPQI is the full SSDI payment. Slide 29. We have included some pointers regarding past work and POD on slide 29. By now, you have heard several times that any work beneficiaries performed between the last completed work CDR and the end of POD should never be developed by Social Security. But CWICS and CPWICS have been in the habit of developing past work as an important part of their jobs. So we want to emphatically state that you should not contact Social Security to develop work that occurred prior to the end of POD participation. It may feel terribly uncomfortable, but we don't want to put people in a bad situation or confuse the local offices needlessly. Social Security has put safeguards into place to prevent their staff from developing past work for POD participants, so hopefully this will not be an issue. Keep in mind that the local offices will need to conduct a work CDR post-POD before they take any action, such as cessation or termination of benefits. Because of this, some beneficiaries may incur overpayments before their record is updated. Slide 30. One final issue that we want to draw your attention to on Slide 30 is some potential impacts of POD participation on Medicaid and Medicare savings plans. During POD, some participants had reduced payments due to their POD offset. This was great news, as the reduced payment amount actually brought their income under the guidelines for Medicaid and/or Medicare savings plans. The state Medicaid agencies used this reduced payment to determine income eligibility. However, once the offset ended, the SSDI payments either returned to the full amount or, in some cases, were suspended due to SGA-level work. Either of these scenarios could affect eligibility for Medicaid and Medicare savings programs. It is helpful for you to know why a beneficiary may have experienced a change in state benefit status after POD. Slide 31. On Slide 31, we have some tips for writing BSNAs for former POD participants. First, use a current post-POD BPQI for verification so that you're sure you have the correct payment amount and information about work incentive usage. You can document the POD participation dates in the summary section at the beginning of the BSNA. This will be especially important if POD participation affects the timing and availability of work incentives, such as the TWP and the EPE. Remember that the last work review action date on the BPQI may not match the date of the last completed work review. You may need to confirm that with Social Security. Generally, if the posted earnings correspond to the date of the last work review action, it is likely the correct date for the last completed work CDR. Also, since POD participants have not been reporting to the local offices, you may need to educate them about reporting requirements under standard law and the different options they have for reporting. Since no work reviews were performed during POD, you may also need to assist beneficiaries to complete work activity reports to ensure that their benefit status is up to date. This is especially important for people who may be at risk of overpayment due to their work activity. Slide 32. And finally, here we are on Slide 32, the conclusion of this training. We have loaded you up with lots of information about the POD project, and we hope that you have found this training helpful in your efforts to serve former POD participants. A few closing reminders. POD ended on June 30th, 2021 for most participants. You may receive referrals for benefits counseling and need to take the extra complexity of POD into account when you provide verbal and written counseling. Fortunately, there were VCU staff involved in every step of POD, so never fear, we are here and available to help you. When you have a question or concern, reach out to your TA liaison for assistance. Thank you for taking the time to learn more about POD.